So how do you speak to a group of finance and tech professionals, regulators, investors about getting a bank license in Canada? How do you do it in 15 minutes? And how do you do it without putting everyone to sleep first thing in the morning? Well, doing hard things is fun, so that's why I'm here today. But with my time, I do plan to do three things. The first one is to tell you about my unique experience, which Gary touched on a little bit, and from where my perspectives come. The second thing is I'd like to share two primary observations from that viewpoint that I have, and then two concluding thoughts for us to think about during the day today, or when you're driving home, or you're speaking with your colleagues in the days to come. So that was 5 minutes each for three things. That's 15 minutes, except I just wasted 2 minutes. Actually, with that whole slide thing, we wasted 30 seconds, so I better get to work. So in 1996, as legal counsel for ING Direct, now known as Tangerine Bank, I worked with my Canadian and Dutch colleagues to obtain a Schedule II foreign banking license here in Canada. We received our letters patent and our order to commence, signed by Paul Martin, for those slightly older people in the room, who was the finance minister at the time. And in 1997, we launched ING Direct. ING Direct ended up being the sixth largest deposit taker in the country, the seventh largest mortgage originator in Canada, and I think in many ways paved the way for innovation and creating a true formidable competitor and option for Canadians. In the years that followed, ING Direct launched a host of other products, so checking account, wealth management, credit cards, and several other lending products, and became many of our clients' primary bank, many of them holding 3, 4, or more products with us over that period of time. Also, and most people don't know this, that ING Direct Canada was actually a template for a global bank-in-a-box concept that was ultimately launched in 9 countries around the world. At the time, ING Direct globally was one of the fastest growing companies in the world, and Canadians were involved in the launch of all of those 9 businesses. So let me take you to more recent times. So in 2023, as Gary mentioned, I joined Koho Financial's leadership team, and in part to help Koho obtain a Schedule I banking license, and to help it build off its tremendous success over nearly the last 8 years, amassing 1 million clients and almost approaching 400,000 regular active users of Koho accounts. So it is really, so as we work with my teammates to work through the Phase 2 bank application process, which is the part of the process we're in right now, I see so much is similar to the work we did in 96 and 97, as well as so many things are different. So from those two goalpost experiences, my ING Direct startup experience, my Koho Get a Bank license experience, that is the perspective from which I will share 2 observations and 2 key messages today. So let me start with the 2 observations. So observation 1, for me, is the fascinating evolution of the rules and regulations in this country, and I think in many ways pushed by the challengers here in this country. So in 1996, one of the challenges of the day for me and my teammates was that the Bank Act, payment rules and regulations never even contemplated opening a bank account with a person that you wouldn't actually meet face to face. So much of what we were doing in that bank application and that journey was to understand the spirit of the rules and the regulations here in Canada so that we could comply with them when the whole time we were never going to meet our customers face to face. Because we were trying at the time, there was no mobile phones, there was no internet. Well, there was an internet, we just weren't all using it. We were a call center bank to start. So I'll give you an example of one of these problems. How would Canadians who open an account with ING Direct move money from their primary institution into their savings account at ING Direct? Well, at the time, the Canadian Payments Association, now as you know is Payments Canada, they did not permit a financial institution at the request of a customer to pull money from another financial institution. So what would happen was a client would need to go to their branch, give the branch instructions to move money to their account at ING Direct. So it would have to be pushed. Well, I think we can all guess that if we stuck with that, I would not be here today and no one would have heard of ING Direct. So through very, very hard work, an amendment to the payment rules was ultimately drafted, which permitted an authenticated client to give instructions to a financial institution to pull funds from another financial institution using the ACH system. Now that was in 1997. It was a very, very important time in this, fighting for that, for the ultimate success of the business. Now, I just explained that to you in 60 seconds, and I will tell you, I made it sound so much easier than it actually was. It was very, very difficult, but listen, it got done. Okay, let me take you to 2010, so 13 years later. So in the US market, I had worked there for 8 years. Financial institutions were processing, you notice I say process and process, I'm not even sure which is right in Canada or the United States. Financial institutions were processing digital images through the payment system, and it facilitated this feature that we all now know as remote check deposit. You take a picture of your check and it automatically gets deposited into your account. So for years in Canada, this was not permitted, until Rule A10 was created in June of 2010, which for the first time allowed Canadians to deposit a check using their mobile device. Now I have a short little 30-second clip to entertain you, so if you could run that clip, that would be great.
I'm up all night collecting teeth. Then I gotta spend half an hour in line at the bank to deposit a check.
You know, with check-in from ING Direct, you can deposit a check just by taking a picture of it.
Doesn't exist.
No, it's real. You just open the app on your smartphone, take a picture, and you're done. Easy.
Check-in. Believe it. Now get $100 when you open a Thrive checking account with Payroll. ING Direct. Forward banking.
Okay, I looked on the internet, that commercial was still around somewhere, and the guys worked really hard to give me a chance to share it with you today. I'd say today the issues are very, very different that we're grappling with. Open banking, regulating payment providers, real-time payment rails, cybersecurity, AML, AI, climate impact, just to name a few. These are issues and matters we were not dealing with in 1996 and 1997. But it really was, for the most part, the competitors of the day, whether it was ING Direct or Ally or PC Financial, and even some credit unions, that were really pushing the industry to be better, to be more client-focused, to be transparent, and to try and be innovative. So one message for today is let's keep pushing. Okay, observation number 2. The evolution, so there's like a 2A and a 2B. So observation 2 is the evolution of consumer preferences that I've noticed, as well as Canadian demographics. So let me start with consumer preferences. So even during my 21 years with ING Direct and Tangerine, I saw Canadians initially grapple with the idea of doing business with a branchless bank. And then several years later, and in the whole scheme of history, not too much later, eventually our clients were willing to have a primary banking relationship with most of their accounts with us without any human interaction, certainly no face-to-face interaction. So in a very short period of time, consumer preferences changed a lot. And Gary and I, last week we were talking, he refers to it as the digital bear hug, which I think is so common and assumed today that you can do business that way and feel safe and secure and feel fine. But it does remind me a little bit of the story of the ING Direct cafes. So we eventually had a cafe strategy which was implemented in Canada, the United States, and ultimately in other countries around the world. And I'll tell you, the genesis was like a very, very light physical presence. So when we launched ING Direct, Canadians were calling us to open an account. And I will tell you, every demographic was calling us, even senior citizens who were retired and just had deposits. I remember seeing an older gentleman who wanted to open an account, and I said to him, like, you understand, like, you can't see anybody. You understand that you can only talk to us on the phone. He said to me, I may be old, but I'm not stupid. That's a great interest rate. So, and he understood CDIC insurance and those types of things. So even though our customers understood that the offer was at the time call center only, that there would be no face-to-face interactions at all, they would still ask us, they would say, please, just let me come see you once. I'll give you my check, I'll say hello, and I'll never come see you again. So being Canadians who launched the first ING Direct, we said yes. And people would literally drive for hours to come open an account, give us an initial deposit. We had this very small waiting area on the 6th floor in Markham, Ontario. We'd have to take executives and call center associates off the phone to talk to them. So this wasn't very client-centric, so we commandeered a retail space in the lobby of our building, and we called it a cafe. And in the cafe, we answered questions, we took an initial deposit, no paper receipt provided, by the way, gave a smile, a cookie, a cup of coffee, and sent people on their way. So it is amazing how things have changed. I mean, today, and I do not have to share with this crowd the statistics, but most people's primary interactions is in a digital way, whether it's mobile or online. So it is fascinating how things have changed in a relatively short period of time. Demographics for me, I think, is quite eye-opening as well. So from a demographics perspective, 400,000 to 500,000 new permanent residents have come to Canada in the last 3 and 4 years. And we all know that that trend is not going to stop, it is going to continue. In 2023, Canada surpassed the 40 million population mark. And it's funny because on the weekend, before I was looking at these statistics, I would have told you there were 35 million Canadians. And I asked my wife this weekend what the population of Canada was, and she's smarter and more informed than me. She also said 35 million. But many of these people, and people in Canada in general, have no credit files or thin credit files, or certainly a lack of credit track record that we recognize here. Also, Canadian spending habits, as I think you would know, have changed significantly over the years as well. A lot of it is driven by spending habits, but also very well-recorded cost of living increases as well. So non-mortgage household debt has reached record highs in this country. All of this creates very important, sizable niches that need servicing. And often our largest banks are not built to serve these demographics efficiently. Credit policy and credit risk tolerance is one example. So entities like Coho Financial or Equitable or Fairstone or Canadian Tire do effectively serve these groups, and they can do it in a safe, sound, and profitable manner. So those are the two observations when I look at those 2 periods of time that really stood out for me. I'd like to leave you with 2 messages as well. So message 1. Often people perceive competition as being disruptive or dangerous or leading to short-term instability in a market, even leading to failures and business closures. But in practice, competition and stability do not need to be at odds with each other. The World Economic Forum's Global Competitiveness Report found that well-regulated competition in a country can lead to a very, very healthy dynamic in that market where businesses can grow, new businesses can be created, innovation can happen, and there can still be the stability in that particular market. But when I look at the choices that Canadians have today in their financial and banking products, when I actually talk to Canadians about it, and I layer in this lens of the changing Canadian dynamic that I sort of alluded to before, I actually see fewer options for them now than in a very, very long time. The fees Canadians pay and in many cases can't afford, the rates they're paid on their savings, all scream to me that choice is good and is necessary in this country. Canadians need more financial players, in my view, and competition does not need to equate to instability in our very important, stable banking system. Message number 2. So, as Coho carefully and thoughtfully works towards obtaining a bank license, I would articulate one major challenge that we and others like us face. So if you know about tech and fintech companies, we raise capital from angel investors, from venture capital, in some cases private equity firms, and these investors are highly vigilant about their capital and their returns, and a 5% dividend for a long period of time is not what they're looking for. A fintech company today can have or receive a valuation of 4 to 8 times annual revenue or even more. While a Canadian bank, even a smaller growth-oriented one, will enjoy an earnings multiple of barely over 1 times in this country. Whereas there are growth banks in other countries that are maintaining tech-like multiples. Nubank out of Brazil is an example. Monzo is another example. But in order to allow this to occur in Canada, I think we need an open dialogue. We need a level of pragmatism that is going to allow a fintech with a track record, like Coho, with strong capital support, to streamline some of the governance processes, some of the costs, capital ratios, and acknowledge the small amount of systemic risk that these types of organizations add to our financial system. Of course, like anything, the devil's in the details, but it's a really important opportunity that will make it more palatable for investors to invest in successful fintechs in this country, and in particular, support their strategic path to becoming a bank in Canada. It's good for the investor, it's good for the fintech, it's good for the banking system, and it's good for Canadians. Okay, I think I'm going to get the hook here soon. I shared a bit about where my perspective comes from. I shared 2, for me, significant observations of what has changed in that period of time. And I shared 2 key messages that I would like us to be dialoguing about, just sort of in general, to affect change. I'll finish by saying the following, that I'm proud to be here this morning representing my teammates at Coho. I think some of them are here today, some even flew in today. Are any Coho friends here? I got tickets for all you guys. There you go. I also wanted to thank Tal and Gary for giving me this opportunity. It's such an important event. No Q&A, so I will be around most of the day, so I really look forward to connecting, answering any questions, and meeting all of you. So thank you so much for your time and your attention, and thank you, Gary.